Hello again, everyone, and welcome to the Options Mentor. Quite a week we had last week, with the end of the week really being accented by Trump saying he was going to tariff, was it Mexico, Canada, and China this weekend, which now he has indeed done. So real implications will probably be coming along in the market with that. So I'm going to talk about a couple of different trades, and you'll kind of see why I like one more than the other. But I will say this, it's tough to do this the day before on a Sunday, whenever Monday we could have a really down open. It wouldn't surprise me if we did. The market tends to get spooked over these tariffs, even though it seems they always seem to just go away really fast. So I don't know how much it's really worth, it to panic over it, but the market seems to do it anyway because these tariffs never seem to last. But we'll see how that all develops. Maybe things will be different this time. Maybe the market will take a different attitude. But if we start out here just looking at the chart, you can kind of see that. Uh, I was I was sitting there on Friday going, wait a minute, we were all the way up here, and all of a sudden, boom. And this was all about the tariffs. You can see on the 15-minute chart how we just fell right off the table Friday afternoon. Tried to do a little stabilizing here at the end. I'm sure that was, this market's very, very much likes to sweep in when there's a big drop, usually, and people want to buy the dip. Looks like some folks were still considering that here, buying the dip. So I think that's what happened here to kind of stabilize things, maybe some market on close orders, that type of thing. So this week, what can we do? I was looking at the news, the pending economic news. There's not all that much coming that I saw. We got some Fed speakers. Certainly that'll have an impact. And we also have the non-farm payrolls on Friday, which will also, I would assume, have an impact on unemployment rate, all that type of thing. So I want to compare a couple different trade strategies and talk about why I like one better than the other here at this VIX level. So here we are in the VIX. You can see over here at 16 and a half, basically 16.43. We closed the day on Friday at 60.40. So I'll be talking about these trades based on trading there. Obviously, if you understand these strategies and wanted to look at one, you'd want to do it, with the centered, with the price of where we're currently trading centered in the graph, like it would be here. So here, for an example, is a double calendar. Now, quite honestly, I love calendars. It's probably my favorite trade. However, it's my favorite trade when the VIX is lower, under 15, really 13, 12 and under. Oh my goodness. Absolute gangbuster. I love that trade there. But even there, I don't normally start with doubles. Calendars can be very sensitive to volatility. If volatility goes down against you, a calendar will really deflate on you. Now, of course, the opposite is true also. Volatility goes up for you and helps you. For instance, your longs go up more in their IVs and your shorts. It can be very beneficial also. But there is a lot of sensitivity there. It's a very it is a very bad trade if volatility goes down on you. In fact, I often tell folks that if somebody tells me that I had on a spread and volatility killed me, I pretty much know it's calendar, because that's the trade that really gets hurt the most by it. Others, not as much. The double diagonal, not as much, as I'm going to show you. And a fly, of course, isn't. It's short volatility. But the thing is, if you say if volatility goes in your favor in a fly, it's never going to give you the benefit that it does in a counter. And if volatility goes against you in a fly, it will never hurt you as much as it will in a calendar. Now, flies to me are primarily price movement trades. Volatility plays a small part, but not a lot. Where calendars are both. You like this double calendar, it's about price movement, meaning that you would like to see the price stay inside the graph, of course. But volatility also needs to stay stable or even go up in your favor for this trade to have its best results. But if we look at a double calendar here, and I'm just roughly trying to compare one with a double diagonal. So a double calendar, if in a like amount of money, that's how come you're seeing two contract calendars and only one contract double diagonal, because the one contract double diagonal is $1,100. So I approximated it as best I could by doing a $1,200 trade, essentially, with the double calendar. So when you do that, you can see that the theta in a calendar, it's terrific. That's the best, one of the best features about it is $563 here in theta. But the veg is high, 281. What does that mean, by the way? Well, that means if volatility goes against you 1 point, meaning, let's say, for example, your long went down a point in this IV and the short stayed stable. That would actually, if it went against you, since you're long it would actually show your P&L down around $281. So it would have that kind of influence on your P&L. Every point that volatility went against you, you would be down $281. And hey, if volatility went in your favor, you would be up that. So it's a pretty big number, and the theta is great. There's not a problem with that. But let's compare it over here to the double diagonal. Now, double diagonal, very similar in prices, a little cheaper here, but pretty close as best I could do. Now we have the theta, it's lower, $251 of theta, and the veg is only 156 though. Yes, big differences in both of these. But I don't want to, in a market that, first off, the volatility is not exactly low, right? We're at 16 and a half. And I would prefer, with a very volatility sensitive trade, to be below 15. So we're a little bit over, and I think chances are we'll probably have higher volatility tomorrow. So that makes that calendar a little more dangerous, because if volatility is high and it does happen to go against you, that can really hurt. Now, hey, you know what? A fly or a calendar can work with the VIX being 30 as long as it stays stable, but that's a big ask, right? So that's why I prefer to do double diagonals rather than a double calendar or even a single calendar in this VIX range most of the time, because it does give you this wide trade. This one, actually, look at this. This is actually, what is that one? Almost 300, over 300 points wide, the double diagonal. And the double calendar, it's not bad either for range. It's about 300 points wide, but the double diagonal is just a little wider, a little over 300. So it gives you a lot of range. It does give you decent theta, 251. That's not bad theta. And yes, your R long vega volatility can help you some. It can certainly hurt you, but not to the extent it will on the calendar. So I think this is a little safer because of volatility fluctuations. I think this is a better trade. Now, a couple of weeks ago, I talked about here on the YouTube channel the difference, say, comparing, I believe I compared a fly to a calendar or a double diagonal. And the problem with flies here is if you're just doing single flies, you don't have enough width. You just can't contain these big moves, because, as I was talking about on here, the SPX has gotten so large, we're here up over 6,000, that even a 1% moves 60 points. You know, flies, if you wanted to get this kind of range in a fly, it would be super expensive. You can't get a wide structure like this in a single fly. So that's why I prefer to do these double diagonals. They've worked well for me. They're not too bad to repair if you have to. And well, flies are certainly not hard to repair either, but you're going to have to adjust it, fix it, or whatever you want to call it, a lot sooner in a fly, because you just don't have the range. Whereas, and I've done this before, I've seen 80 and 100-point moves in these, and you didn't have to do anything to the trade, just let it work, because it didn't violate anything. Take a look at this, for example. What if we went down 100 points after you had this on? You're still well within the structure. And if we went up 100 points, same thing. Now, and of course, that's true with the double calendar, but we talked about this calendar. The whole problem with it in this environment is the volatility risk. Otherwise, there'd be nothing wrong with it. But when we're in this environment, I want to take a little less volatility risk going down. You could get this thing on, we could have the tariffs go away and market rallies, of course, volatility go down. It's already, it's not too far off from our calendar range, but it is up a little bit. And like I said, I'm concerned we could have a rough day tomorrow in the market. We'll see. And that brings to mind another point. If we open up down 100 or something, I would probably wait a little bit on this and see where the volatility goes. And of course, I like to put my trades on later in the session anyway, to just decrease the risk of having trouble the first day. Just a minor tweak of mine, but this market often does that to you where it's one way in the morning and then does differently in the afternoon, like it did Friday, for example. Um, so we'll have to see. I know, I think it was last week I talked about a calendar and we had that big down day. You're going, wait a minute. Okay, let's not, obviously. And it's the same thing with this. If we're down 100 tomorrow and, we're not stabilized at all, I think you're going to have to hold off on this a little bit. Maybe wait until we at least look stable where we're at. And with this one, by the way, you could be at 20 on the VIX and still put this trade on if you like. So even if we do go up in vol tomorrow, it's okay to put this on within reason, 20, even low 20s is fine. But we don't want to do it when we're not stable. Let's say the market really gets upset over tariffs and goes down 100 and looks weak and keeps going 160, 180 points down. That's not a great time to put on a trade that's non-directional, meaning you are comfortable with it going in a range in either direction like these are, but there is a limit, right? There's only so far we can have this go in either direction before we have to take action. It's going against us too much. So whenever the market's not stable, that's not a great day to put these on. So you might have to wait and see how things shake out. But I did want to share that with you just so you see why, one, I think double calendars are a little bit problematic. If you were ever going to do them, yeah, I'd want the VIX 12 or 13 or less. And in this environment, they're just too dangerous. That volatility could go down. Yes, it could go up and help, but I prefer what you're trying to do with trading. I try to do is I'm trying to put the most things in your favor. We can never have it all figured out and know exactly what to do and what's going to happen because we can't see the future. We don't know where price is going. I mean, if you knew the price was going down hundreds tomorrow and you could buy stuff now, yeah, you'd buy puts, of course, if you knew that, but we don't know that. So that's why I like this style of trading, is because I don't want to have to worry about which direction it goes. I want to be able to make money in both directions. That's why I like this. And this particular trade gives you a lot of room in that, but you do need, of course, to watch the environment you put it on and stable market, volatility not too out of hand. You don't want some 30 on the VIX or something. So you have to be a little careful with that too, because even, when the VIX is up over 25, first off, that's really not usual. It's basically telling you the market's very unsettled. Lots of big movement could happen. So that's not a great time to put on non-directional trades in general. And by the way, if you look at a VIX chart, very often it drops pretty quickly. So you could put something like this on, even a double diagonal. If you put this on at 30 and we go down in the VIX to very low 20s or something, it's going to just take all the gas out of this trade, because even this trade would get hurt by that kind of volatility drop. So let's do this in the right volatility range. We'll see how this develops this week. I don't know. It just seems to me that the market got a little riled over even talking about it Friday when he actually did it. We'll see. I mean, it may be that the market's got out most of its angst Friday, and maybe they figure 60, 100 points is enough to account for tariffs, but we'll have to see. So whenever we look at it tomorrow, we can look at it and evaluate whether this is the right time for things or maybe something else. As always, folks, I appreciate you being here. Please hit the like button, the subscribe button, and also check out the description. I have ways you can, my most popular, I guess you could say, product that I have is folks following me on live trades. I put out a trade, then you come along. I put it out before I put it on. I send it out to those who are on my trade alert, so they have a chance to put it out with me. And once that alert's out, then I'll go and work to put mine on. I don't front run you or anything. Anytime I repair it, I put out exactly what I'm doing. Anytime I put in profit orders or whatever I may do, it's all there, and it comes out beforehand. Also, you have access to Slack, which is it's a messaging app that we use where if you have my service, you can talk to me all day long. And I even talk about things before I put a trade on. Hey, I might be doing this. This is why I'm thinking about this instead of that, kind of describing and deeply and analyzing stuff before I put it on. But if you can do that, and you can do my opening bell traders lounge, which means you could follow me on trades, and you could be there every morning at half hour before the market opens when I talk about what's going on, what the futures do overnight, what might be in focus today. And then 2 days a week, I have traders lounges where we look at live trades. And also there's a help desk feature there. If you have a live trade on you want me to take a look at, you can do it there. That's a very popular product. It's all there. You can follow the links to it in the description. And of course, I do one-on-one mentoring, also very popular. Just email me there in the description. My email address is there, theoptionsmentorspx at gmail.com. So all that's good, all that's there for you folks. Please keep up with the comments. As you can see, I do answer those. We've gotten some good ones. So I look forward to seeing those from you this week. Everybody have a great trading week. I'll be back with you here next week on Super Bowl Sunday. So we'll get this done in the morning before we most likely eat way too much while we're watching the game and the commercials. All right, folks, have a good one. Bye-bye.